Hi, this is Zach from Zach's Traders Cafe with a look at some major markets on Monday, the 26th of September. Starting off with the FTSE 100 and cleared the 6850 red August resistance line. That needs to be held now ahead of further gains, although I have to say, given the rather weak start for the UK index this morning, it doesn't appear that today will be the day of the big break to the upside. But at least notionally, while above that red line, we're heading for a 7,000 plus target, possibly as high as 7,200. The red flag here, let's say, would be a break back below the 50-day moving average at 67.90. Onto the DAX, and key feature here really the way that we've had these gaps to the upside and downside. That really does indicate some market confusion for today. Market looking particularly weak with the aftermath of the latest IFO data and a gap to the downside here. Probably the key here actually is a bit more to look on the longer term with this resistance line from way back in August last year. That's running through 10,750 roughly, and we're between that and this uptrend line from June at 10,400. A break of that would really determine the big move for this market. At the moment, obviously, this looks rather negative given the gap to the downside today. On to the US markets, and also a hint of weakness, let's say, for these situations. For the Dow, the reason for the disappointment, let's say, is the failure at the 50-day moving average, failure to fill the gap, and also then closing the gap to the upside from the end of last week. View at this stage is that at least while we're below the 50-day moving average, we're heading back towards the main 8,000 support, so a couple of 100 points or more of downside, even if this market can then revive itself. On to the S&P, and also a concern in the sense that we gapped up through the 50-day moving average and then headed up towards that gap. Top of that gap was 2177. The peak on Thursday, 2179, so a gap fill reversal back below the 50-day moving average at 2169, and really while we're below that, the risk is of a retest of 2120. 2120 breaks, one would say that this market is almost certainly going to deliver a correction back down towards the 200-day moving average at 2060. Onto the Nasdaq, which was almost unaffected by the September sell-off, but it seems to be wobbling a bit now. We had the gap higher on Thursday, failure at just under around the 4,900 level, 48.95, and then back down again. Probably one would say that while we're below that Thursday peak, there is a risk of heading back towards the 50-day moving average at 47.63. Onto the currencies, and it's a surprise, really continues to be a bit of a surprise that sterling is so weak. Situation here really, we've got the all the near-term moving averages falling, 10, 20 and 200-day way up at 139.85, but the 10-day moving average at 130.68, the key in the near term. While below that, we have a risk of fresh leg to the downside, possibly towards 126 within a falling trend channel, which can be drawn from the middle of July. Onto the euro, and here we're in the run-up to testimony from Draghi, but a triangle formation really between 111.50 and the 50 and the 200-day moving average rather, and 113, the top of the triangle from August. Wait for a break of that range, otherwise trade the range. Although it has to be said, within that range, this market looking very, very quiet indeed. On to dollar yen, which really where the 100 yen level is key. Looks as though we're actually going to go down now and break that level. We had the big candle on Wednesday. I only managed to retrace around half of that before falling again today. So at least while we're below the 10-day average at 101.56, one would suspect there's going to be a new leg to the downside here. Situation is probably a trend channel heading towards the 95, 96 yen zone, well, 96 zone, probably the obvious place to head, at least while we're below the 10-day moving average. On to finish with the with gold, and Here, this is looking rather more chirpy now. Looks like we've got a possible bull flag forming here at and above the 50-day moving average at 1332. Break back above 1340 or 45 is probably all we really need. Probably 45 to be safe is all we really need to suggest that there's going to be a new leg to the upside. Breaking that 1350 and heading towards the 1400 zone and new highs for the year. This stage only back below the 10-day average 1323, even delaying the upside scenario. That's it from me. More updates at the same time tomorrow.